Obviously, it's been a very tough environment to navigate for asset managers like yourself. I have to wonder, the $1.1 billion that you raised, is this something that you're satisfied with, and given the conditions that we're seeing right now?
Yeah, very satisfied with. I think meaningfully ahead of the target we set out when we went to raise the first pool of capital for Asia. I mean, the big opportunity that we see in Asia private credit is the simple fact that Asia is a third of global GDP. It's almost 2/3 of global growth, but it's only 8% of private credit AUM. And so there are relatively few non-bank lenders in the market, credit market growing very, very quickly. So we see a big opportunity really to pivot away from where the banks dominate the market and provide more flexible capital solutions. As a firm, we've deployed about $2.4 billion in the last 3 years into this opportunity set. And so today is really the day we raised our first fund to go after it.
Yeah, so I was going to ask you that too. Why split this off? And I'm looking at 1.1. It's a big number for most people. For KKR, this is not so big. Just help us understand the scale of what you're trying to do and how you set to differentiate this from what you guys are already doing anyway.
Yeah, look, so it's one of the largest inaugural fund, maybe the largest inaugural fund ever raised for Asia private credit. And really it allows investors to get exposure to private credit assets in Asia. I think as we talk to investors, there's broad recognition that there's some very powerful and attractive secular trends that underpin Asia and Asia alternatives. Rising income, rising discretionary incomes, growing middle class, growing millennials. And so we continue to see very strong demand, not just from investors to invest behind these Asia trends, but also from companies who need these solutions to achieve what they're trying to build and to grow.
What are your views on China right now, Brian? Obviously, companies are still undergoing a major regulatory crackdown. How do you navigate around that right now? And what is your exposure to China at the moment?
Yeah. So today we have relatively little credit exposure to China. I would say you're right. The opportunity has gotten more complicated. As a firm, though, we're very, very committed to China. We think a lot of the attractive long-term growth drivers are still intact. The team we've got on the ground, we've got 50+ people, really bringing a very strong combination of global business with our local teams. It's a big market. We see a lot of deal flow. I think we will be cautious and prudent in this environment, but are optimistic about China as a country and particularly for credit.
Right, and to clarify, this specific fund, right now, my understanding is most of it will be ex-China. Can you just clarify that for us? Yeah.
So the strategy is pan-Asia. And just to kind of set the stage, we've got, as a firm in Asia, we've got north of 50 billion of AUM. We've got 140+ investment professionals, 8 offices. We focus across 6 focus regions, core regions within Asia. The majority of what we're doing is in Australia, Southeast Asia. Australia tends to be more of a financial sponsor-driven market. Southeast Asia is more of a leading corporates who just can't get the credit capital that they need. But we see opportunities across Asia. We see it in India, we see it in China and Korea, Japan as well.
Okay, your target in terms of returns for this fund, Brian, and just sort of juxtapose that against, what Yvonne's earlier point was, in China, distressed assets, a lot of these things are very, very cheap. Are you having to compete with the same type of investor that are looking at that side of the credit market and looking at perhaps bigger returns?
Yeah. No, I mean, we're really not competing at all with distress. I mean, the strategy here is performing credit privately originated pan-Asia. So that's lending to leading businesses, strong market positions, high quality counterparties, growing markets. And our strategy is across the spectrum from senior credit, senior secured credit, all the way through junior. But the threshold around the type of companies we want to lend to and the type of risk we're willing to take is consistent across those. So we're really not spending a lot of time at all focusing on the more distressed corners of the credit market. And frankly, we see the bigger opportunity, the more scalable opportunity in that performing space.